Hi, everybody, and welcome to the Bernadette Pillar Real Estate Podcast. I'm your host, Mike Gonzalez, alongside, of course, Bernadette Pillar. And we've got a special guest today, our primary lender, Chad Thomas from Q Home Loans. This guy knows his stuff. He's been in the industry 27 years, so we're proud to have him along on our team. And he is an awesome guy. He's got a great hat, so we really like that. Guys, how you doing?
Doing great. Thanks for
Good.
having me.
Oh, it's our pleasure. Bernadette, I really tried to pump him up there. You have anything else to add about Chad?
Oh, I do. He might blush a little, but Chad our team is great, but Chad really makes us look good. He knows his stuff. I am proud to call him my primary lender, and he is just phenomenal. He knows his stuff backwards, frontwards, all different ways. And he's great at it. So I am very happy that he has agreed to join us today. Chad, thank you so much.
Yeah, thanks again for having me.
Yeah.
I was excited to get him on board because the podcast has been well received so far. So trying to spice it up a little bit. So let's get right into it, Chad. We were talking offline a little bit. You know, in terms of loans, whether I haven't been in the real estate game in a long time looking for a house, or it's my first time, where do I start?
Yeah, so anymore, especially with COVID, so much of it has moved online and over the phone. Typically, what we do is when Bernadette refers us a client, we work with them to fill out just a quick loan application online. It only takes 10 to 15 minutes. At that point, my team reviews the application that they send over, and usually same day we have an approval for them, and we run through all of their down payment if they have one. We also run through payments, interest rates, all that stuff, usually same day or next morning. So.
How important is credit? Because I know both of you deal with this, and me as a new realtor dealing with this as well. Oftentimes people will come, they haven't checked their credit or they have marginal credit. Bernadette, I'll start with you. How often do you see people come to the table that aren't quite prepared, that need to? And Chad, dovetailing on that, how important is credit in this day and age?
Well, I'll just tell you that, like Chad said, it often does start with the realtor, because family will refer a client, and it really probably should start with the realtor. The realtor works very closely with a lender. As I've expressed here today, Chad is my primary lender. As you know, as long as that relationship is the healthy relationship that exists here. Working with a realtor lender combination usually does prove to be a best experience, rather than a consumer buyer working with online lenders who don't have a local presence. Working with Chad, for instance, provides me all kinds of benefits. So I will get a buyer who presents to me in a myriad of ways, whether it be a referral from previous clients, or they just have seen my name, or and want to truly want to work with me or one of my team members. And then what happens is, just like Chad says, the first thing that we need to do once we connect is sit down for a buyer consult, and then I lead them to Chad for the approval process. And to answer your question, credit is the very, very important component. And often buyers, the consumers, before they turn into buyers, they don't always have a good touch on their credit. In my experience, and in my experiences with Chad, they don't always, they haven't even looked at or run their credit in a long time in most cases. So that's where we start. And I turn them over to Chad. Chad does also like that. Oftentimes when I have a buyer sitting in front of me, I will help them through the application process. It makes it quicker. They'll sit in front of me and I'll help them, because I'm very experienced in what Chad is looking for in those questions on a loan application. So I'll help them through that process, and then it goes from there. Chad will get in touch with them with any questions and whatever. But now I'm going to let Chad talk about the importance of credit and the other expectations in that realm.
Yeah, I say all the time, I've never declined anybody for a mortgage. we take them and we put them on a path to approval. So if I look at their credit and there's some things that we need to tweak, I can come through and give them a very accurate picture of what they need to do to put their credit score at the point that they need to be at. The credit score affects the interest rate, the down payment, the type of loan. So all of those things are important. One thing that I do that kind of sets us apart is I run a soft credit pull versus a hard pull on my pre-approval. So when the buyer comes in, I'm running a soft pull, which doesn't impact their credit score. I'm first looking at that credit. We're coming up with a plan. If it's ready to go right now, terrific. We'll move with it. If not, then we come up with the plan and what we're going to do to get them on the path to approval. There's lots of different things that we can do. We can pay down debt. Sometimes that will help raise a credit score. Other times we'll open a new revolving credit card or we'll close one. So there's all kinds of different things that you can do. And as a consumer, if you don't do it every single day, you can tend to pay off a collection or do something that may actually lower your credit score in the short term versus raising it. So I often tell people before they start trying to do their own credit repair, talk to me first and let me run through it and get them a plan first before they do that. And we want to look at everybody's credit. I mean, we don't want, if you think that your credit isn't good enough to get a house, still call me and let's look at it and let's figure out how to get you there. Maybe it's 3 months, maybe it's 6 months, maybe it's a year. Very rarely does it take longer than 6 months to get the credit score where we need to be. Most of the time it's under 90 days.
Yeah, that's really interesting.
And to piggyback on one other thing that Bernadette said, how important it is to work with the lender referred by the realtor. It's a big deal because I want to do everything I can to impress Bernadette and make sure that she knows I'm taking the best care of her client that I can possibly do. And it just puts that level of service where everybody on our team knows that we just got to bend over backwards to make sure that this process goes smoothly for the consumer. When you're dealing with an online lender, they know they're probably never going to talk to that person again, and they just don't have that same level of I guess, commitment there. And every lender in town talks to Bernadette as often as they can. So Bernadette has really done a lot of the shopping of lenders for us. If I don't offer the best rates, those kinds of things, then, we may not stay in that awesome primary lender relationship that we have right now. So we always want to make sure that we have the best rates, the best programs.
Yeah, but it's not always, another thing that I wanted to bring up is sometimes that is very deceiving, Chad. Maybe you can help me explain to Mike and the consumers out there that a lot of the buyers / consumers are looking for the best rate versus a quality lender. And it's the buyer chooses the rate. And when I say that, I'm sure everybody's going to say, what do you mean the buyer chooses the rate? I wanted you to embellish on that a little bit. And I'm sorry with all the ums and the ahs, I'm trying to get better. My middle name is not Robin Scherbatsky, so I'm trying to get better with the ums and the... Anyway, Chad, if you can embellish on that just for a moment.
Yeah, when I go through the interest rates with the buyer, I look at every single rate on the rate sheet. So we may have a rate of 2.75, a rate of 2.875, a rate of 2.99. And we're going to talk with each client about their goals and which of those interest rates they think is best given their specific needs. If I have somebody who's going to live in the house for the next 30 years, that person may not benefit from the same thing that somebody who's only going to own the house for 2 to 3 years would benefit from. Typically, if you're there for less time in the house, you may choose a higher interest rate with lower closing costs. And it's a conversation that we have with each buyer, but ultimately the buyer will choose their own interest rate. We'll go through all the pros and cons. I won't leave them on an island. I'll tell them the one that I recommend, but if they disagree and would like to do a different one, then no problem, we do that. Most lenders are fairly close in rate with each other. You do occasionally have an online lender that throws out some crazy number that you don't know if it's going to be legitimate or not. issue that you can run into with that when you're dealing, first of all, it's hard to get an offer accepted. As a listing agent, when you're working with an online lender that you don't know or trust, it's hard to want to let your sellers know that you're comfortable with that offer because you don't know that lender, you don't know how they operate. So a local lender will, one, help you get your offer accepted in a multiple offer competitive scenario, but also just from things like getting an appraisal assigned. I'm hearing from appraisers and realtors right now that their online lenders, they can't get an appraisal actually assigned to look at the house. So they'll sit there for 3 weeks trying to get an appraisal assigned before they eventually just call the client and say, I'm sorry, we can't get an appraisal. We have to decline your loan. Go find a local lender. And that's happening a lot right now.
Well, really interesting.
Yeah, and can I pipe in on that real quick? I think you noticed my eyes moving from the screen for a moment. When Chad brought that up, I also am a broker, as you know, in Hawaii, and I've got a transaction that I'm dealing with, and I just got notice from my buyers because the offer that we have in Hawaii is contingent on them selling their home in another state here on the mainland, and they just texted me and said our buyers are VA, and it looks like we have to push closing from October to November due to the buyer's appraisal. So what Chad just said is very timely. The appraisal that's happening on their house is just, and we've been in contract since August. So anyway, that's just an example of what Chad is talking about there.
As local lenders, we consistently close in under 30 days, and that's really the requirement in this market. As a buyer trying to write a competitive offer, if you put a closing date longer than 30 days, it's going to weaken your bargaining position when you're writing that offer. So we try hard to keep it within 30 days. I actually don't know of an online lender that can close in 30 days. They're more like 45, 60, and sometimes even beyond that. So while our rates are all pretty close, the service levels you get locally are a lot higher.
Yes, I can clearly see through my lens that there's going to be a real difference between your personal touch, Chad, and going to an online lender. Kind of parlays me to my next question. Sort of what are the expectations as someone who's seeking a loan, and especially in regards to this market where things are moving so quickly. Inventory is low. Offers have to be sometimes really high, even over list price. Should I have my loan in line before I make an offer? Or, it's always that gray area when you make that offer, then the contingency component. I guess this is kind of a multi-layered question. How should I have my loan in order before I make an offer? And what are you seeing, in terms of trends? If I have a contingency, how often is that falling through and they're not getting the house?
There's a couple things there. It's a good time to bring up the difference between a pre-qualification and a pre-approval. With a pre-qualification, that means you've talked to the lender, usually on a piece of chicken scratch. He's writing down, oh, you make about this much and your debts are about this much based on what you've told me. I haven't even run your credit yet, but I think you can probably qualify for 500. And then you go look at a house. That's not the way I do things. I'm going to take the full application up front, approve you so you know for a fact that you can actually buy that house. There's nothing worse in the world than, telling your family you're pre-approved to buy a house, getting your realtor to write up an offer, get it accepted, have the seller relying on you, posting on Facebook that you're going, you bought a house, and then all of a sudden at the end, it all falls apart because the lender doesn't know what they're doing. And so it's a big deal to be pre-approved and not pre-qualified. The contingent piece, I'll let Bernadette talk more about. It is difficult to get contingent offers accepted, but right now it seems to be maybe loosening up a little bit on that, but I'll let you comment on the contingency piece.
So, Mike, when you say contingency, do you mean contingent on financing or contingent?
Primarily financing. I know there's some other elements, but primarily financing.
Right. And we talked about that in our podcast last week, the definition of contingency. Just a reminder, it means if this happens, then this happens. So what we're saying in an offer that has a financing contingency is, in my case, it would be, if Chad can give me a loan, then I'll buy your house, Mr. Seller, Mr. and Mrs. Seller. Okay. So those most offers in my world, are still financed, financed offers. We are still seeing a lot of cash though in the marketplace. This is still a seller's market, and we are still seeing a lot of cash. But I don't want to discourage buyers who are, who need a loan, because that is the majority of it. Most people do need to get a loan. So as long as other things about the offer, as long as the rest of the offer is structured properly, then there's not too many pushbacks on a contingent on financing transaction. If you find yourself in the $300,000 or lower range, I'll admit there is a little bit more cash in the marketplace in that price range. So you might be competing a little bit more. Does that answer the question?
Yeah, no, I think that's a good answer. On top of that, I do want to ask you guys, what are some of the absolute do nots during the loan process? Because you hear sort of these urban legends, like, they were pre-approved, and then the guy went out to Home Depot and bought a fridge that was $5,000, and then all of a sudden he's not approved. Can you kind of dispel some of those myths and the realities, and what to absolutely not do once they come see really both of you guys?
Well, I'm going to let Chad start, and then I'll add my little ending touch on it. But Chad, please take it away.
Yeah, so there's two things. There's one that is using an existing credit card, and there's another that's opening a new credit card. Some lenders actually run new credit right before they send out docs. We don't do that. There's too many things that can go sideways with that. If the score drops a little bit, it can affect your interest rate, your mortgage insurance premium. So what we do is the credit bureaus actually notify us if somebody opens a new debt during the process. So if we're working along, we've already run your credit, we're not going to run it again, and then all of a sudden 5 days before close, you go to Walker's Furniture and open up a furniture account for a new bedroom set, we're going to be notified right away. And it's not that will always cause a problem. A lot of people would still qualify with the new debt. It's just the whole file has to start over, and we've got to go back to underwriting, and it could be a 2-week extension because you've opened something just before close. I've got a million stories, I'm sure Bernadette does too, of people buying cars and buying, we had one person do a $300 charge card to the Gap and then paid it off right at the same store visit. They opened the account, then they paid it off, and it ended up causing about a 3-week delay in the loan close because the lender that they opened it with would not verify any information for us because they immediately closed the account. So there's all kinds of stories like that in the business. Most of them aren't catastrophic, other than time is of the essence, and we have to close on time. Yeah. Yep.
So the only couple things that I could add on to that is one is to say, oh yes, Chad, as you know, we share so many of those same stories, but then I do have, of course, my share of additional stories. I'm really quick to over teach because I want consumers to really hear what we say. Is I always tell my buyer clients that your money, don't get offended by this, but your money is not your money during the home purchase process. And what I mean by that is I try to overteach and tell my buyers that anything that they want to do with their money or their credit card, they need to discuss with Chad first because it's better to be safe than sorry, yeah. Right?
It's not a time to ask for forgiveness instead of permission. You want to ask for permission first.
Exactly. So what I tell them further is, until I give you your key to your new house, please ask permission.
Don't do anything new.
Yes, don't do anything different or new, okay? And that could be, you think you're paying, like Chad said earlier, not to sound redundant, but if you think you're doing a good thing paying off something, it could harm you just as much because we might need that line of credit, Right. So just another quick story. Chad talked about the Gap on one of his stories. I had several years ago, we had a buyer who was using the Washington State Housing Finance Zero Down program. They were so tight with their limits, debt to income ratio, and their their actual qualification limits. They were pregnant and getting ready to buy their first house, and they thought it would just be so simple. They went out and bought a stroller, and they bought a Cadillac of strollers. They charged a $400-ish stroller, and like Chad said, just with that his example, it caused us major problems because that's how tight they were. That payment for that $400 charge was upsetting the transaction quite a bit. So anyway, that's my little bit of.
So those are not urban legends; those are facts.
They are facts. They are. Mm-hmm.
But it's good to hear it from you guys, the experts that have actually seen it with your own eyes, and especially in this market with how quickly inventory is moving, you can't afford any sort of delays. So patience is a virtue, people.
Absolutely.
That really is the essence.
And as a lender, we try real hard to coach, and Bernadette's team does an amazing job of coaching the client on this too. But I also definitely coach the client that we can't open any new cards, even things as simple as transferring money from one partner to another during a transaction, where you move from one person's bank account into another person's bank account. Even though you're both on the loan, it can cause major issues. So just anything out of the ordinary, even selling a car, anything like that, we ask them to talk to us first.
Yeah, that's really good advice from both of you. I wanted to talk a little bit about down payments and earnest money, and Bernadette and I have talked about this in previous podcast, but wanted to get your perspective. First of all, how important is earnest money in the process? Then, you hear so many things. Everybody's an expert. Like, I love how Bernadette always talks about Uncle Guido, who knows everything, right? You need a 20% down payment. You need a 30%, 40. So can you kind of dispel some of those myths, Chad? In terms
real quick, I want to go on record that because if a consumer today isn't watching our previous podcast, I don't want anyone to think that I'm dismissing the value of our family and friends.
Oh yeah.
So I just want to do a disclaimer there. But I'll let Chad please take it away.
Yeah, there's still a pretty common misconception that you have to put 20% down. There are a million great loans out there that are 3% down, 5% down for first-time home buyers. There's definitely zero down Washington State housing type loans. So there's all kinds of programs like that. Mortgage insurance has gotten incredibly cheap. And what mortgage insurance is, anytime you put less than 20% down on a home purchase, the lender requires you to have mortgage insurance in order to get a Fannie Mae or Freddie Mac loan, which is kind of the standard that everybody does these days. So that monthly mortgage insurance used to be very expensive. Now it's very cheap. There are a lot of times when somebody is really scraping and struggling to try and get to 20% down, when really it might be even cheaper to drop to 15% down, pay a little bit of mortgage insurance, save that money in their pocket, and it really, really can help them. A lot of the first-time homebuyer 3% down type products have very reduced mortgage insurance rates as well. So it's, as much as people worry and talk about how much prices have gone up over the last couple of years, the affordability in Spokane is still very, very good. The cost of mortgage insurance has come down. The interest rates have come down. The property taxes have not been keeping up with how fast the appreciation is. So there's all these positive factors that do and have made buying in Spokane still very, very affordable. We still are one of the most affordable markets out there. That is all the markets with COVID and people being able to work remotely. The markets are kind of coming more to a center. If you have people in a high rent area, they're tending to move to more affordable places to live because they can keep their job and still live, more cheaply than they were. So while affordability is getting less affordable in Spokane and more affordable in other markets, we're still on average better than most places.
That's great to hear. I was going to ask you guys, but being on that topic of remote workforce, are you seeing any trends from certain parts of the country coming to Spokane?
Yes.
Yeah. Yeah,
Go ahead,
definitely.
Bernadette.
With all the cash buyers over the summer, a lot of those were transplants relocating from other markets. They've sold their houses in the high rent areas, and they had enough cash left over to pay cash over here, which did make affordability a concern because it made it hard for a lot of residents who had been saving a down payment to compete because they were offering over list price, and guaranteeing that even if the appraisal didn't come in, they would cover the difference. So that's that definitely the transplants here did make that a little more challenging just because they had sold houses in other markets.
Are you guys talking California primarily, or anywhere from this side
Yeah,
of the
California is definitely one. Let's see. Even I've seen from Colorado. Like correct right now, my existing inventory of buyers and sellers, we've got buyers from Florida, buyers from Colorado, buyers from Chad, the one we just got signed around. Ironically, I am a listing agent on a contract where Chad happens to be the lender for the buyer. So when the offer came in, I was like, wow, this is excellent. They're using my primary lender, so it makes me feel more comfortable about the transaction and what have you. Can you tell me what state they're from again?
I think they were coming in from Georgia. It was either Georgia or Alabama.
Yeah.
We have a lot coming in from Florida, just like you said, California, the West Side. We have a lot of still Seattle,
Yeah.
West Side people coming over. I've seen a lot from Nevada and a lot from Utah and Colorado. So those are kind of the main states that I've been seeing.
And in fact, from our last podcast, we received a consumer wrote in from Tacoma saying that they're originally from the East Coast. They're in Tacoma. They are being priced out over in the Tacoma area, and they're wanting to come to Spokane. And they were asking me in that YouTube feedback as to, what we're seeing over here and how it compares with Seattle, Tacoma. So yeah, we're still seeing that a lot. Mm-hmm.
Yeah, it's great to see there's still the affordability aspect in Spokane. And I remember when I moved to Spokane 14 years ago, we had such a chip on our shoulders from, how nice we were, and people are finally discovering us. And, you hate to say it had to happen like this, but it's nice to see people recognizing the beauty, the affordability, and, that we are a primary place to go in the Pacific Northwest.
Yeah, we still are.
Yeah,
all the
things we have to offer. It's just really just a beautiful community.
Yeah.
So
we still are, but I don't want to be complacent in not recognizing that our prices are definitely going up.
Yeah, they are going up. I mean, there's no question. It's this market has really pushed them higher. Well, man, go ahead.
That'll result in higher wages in our market too. I mean, it flat out will, with all the technology people coming in. And when you talk about the states they're coming from the West Side, from California, from Colorado, those are very tech driven markets. So you've got a lot of people working remotely in tech that have moved here. Our experience has been over the years that when people work remotely for a while, they want to eventually get back to an office type situation. And I think that Spokane is ripe for that, as far as investment coming in from some additional big tech companies. We already have a lot, but for more, because we do have a great pool of talent in Spokane that they can draw now.
Uh-oh.
I think I froze up.
Yeah, but I think we knew where you were going with that. That's an interesting take, Chad, that you don't hear too often, is that, some of the remote workers that settle into an area will actually spurn almost a new economy. So, I mean, it's just another recruitment tool to get people to come to Spokane and the Pacific Northwest in general. So that's a really, really interesting observation.
We heard that from people for years, that Spokane didn't have enough tech ready people for employment here. And now it's just not the case. We've got so many colleges and we've got so many people that have transplanted here. It's I think the labor market is ripe for it.
So that's pretty exciting to see. So we've covered a lot of ground in this one. I didn't know if there's anything else you guys wanted to touch on. Go
Now,
ahead.
three things that I want to, real quick, it should be really quick. Chad, can you run by a list real quick for our consumers on what you're looking for? First, the online application, but then what, like pay stubs, tax returns, a quick list of what you immediately need to make the process run very smooth from the beginning.
Yeah, so there's two lists. There's one for a self-employed person and one for a not self-employed person. So for the not self-employed person, typically we just need a most recent paycheck stub, maybe a W-2. So many employers now have the verifications of employment online, and we can do what's called day one certainty, where we can pull the verification of employment, run it through the automated underwriting, and immediately we're good with the numbers. So usually, if as a consumer, if you're not self-employed, if you figure 2 years W-2s, 30 days worth of your current pay stubs, and 60 days, it's actually no, we'll say 60 days worth of bank statements. A lot of times it's only 30. So those are the things we're looking for from not self-employed buyers. From self-employed buyers, it's typically, if they've been in business for at least 5 years, it's typically only 1 year tax returns, and then 2 months of personal bank statements, 3 months of business bank statements, and that's about it. We kind of walk through that with them. So once they fill out the application, I run through all the numbers with them, pre-approve them, give them a list of items that they need. They can upload those items right to my website. We put it all in the system to complete all the pre-approval. Meanwhile, you're out looking at houses, you get one signed around. And typically right now, as soon as you get it signed around, we're ordering the appraisal, just because appraisers are a little bit behind right now. So on a 30-day close, we order the appraisal right away. And then we just are sitting there completely underwritten, clear to close until the appraisal comes in. So it's, for the most part, fairly stress-free.
And so there are exceptions to everything that we teach. We've talked about that in previous podcasts. So when Chad gets all of those documents, and sometimes he has to go back to the buyer to ask for more documentation, because something may show up in the bank statement or what have you. So I just want to go on record as saying that it should be pretty simple. However, each person's portfolio is more complicated than another. So keep that in mind. The other thing that I wanted to touch on, Chad, real quick is, let's see, we talked about what not to do. Oh, the loan programs that exist are FHA, conventional, VA, and we have go ahead, keep going. I'll let you take it.
Jumbos. A jumbo loan is if you finance more than $548,250, and that gets into a little different category. But the majority of what we do right now are what we call Fannie Mae and Freddie Mac loans, which are conventional loans. And then you have FHA type loans. Those are typically done with people who have credit scores under 700. That's kind of the main time that we use FHA. Conventional has gotten very aggressive in their 3% down conventional program. So if your credit score is over 700, typically we kind of we look at conventional first, because that's usually less expensive. But VA loans are amazing. And if I'm happy to talk with people about VA and how that works, and for a veteran to be able to do 0 down. And it's a little bit more difficult to get an offer accepted right now, just because there are so many other offers that are coming in. And there are some misconceptions around VA loans. Some listing agents believe that their seller is going to have to pay more money if they accept a VA offer, and that's not correct. There are some other things that can be challenges for VA borrowers, but I'm happy to talk through those with you guys when, if you ever want to run through that. So.
Okay, and then,
go ahead.
and then you did. Oh, I'm sorry.
Oh, no,
you did talk about credit score real quickly. So I wanted to just real quick, from what is the lowest credit score that we're looking at right now for minimum qualifications?
You probably want to be over 620 at a minimum. There may be some products out there that allow less than that, but usually the pricing is not worth doing it. It would be better to spend 30 days and let me help you clean up your credit. Because if we can get you to a 660, instead of putting you in an inferior product, I'd rather spend that little bit of extra time getting your score where it needs to be so that we can get you into it. There's always exceptions. Sometimes people have to move, and obviously the rental shortage is real. People have no place to go. So if we need to move faster, we will, but I'd rather spend a little bit of extra time with you cleaning up your credit before we go any lower than that.
Okay, and one further question, and then I'll hand it back to Mike, is how long does an individual need to be on their particular job to qualify for financing?
Yeah, that one's tricky. If a person has moved from one job to another in the same line of work, they can usually be approved immediately. There's no waiting period, anything like that. Now, if you were off for 6 months, say because of a COVID layoff, and now you've just returned back to work, we're probably going to require that you be back on that job for 6 months so that we can see a history. And because you've been off for a while, we need to make sure that you're back and good. But that's a case by case where we look at each one individually. It also is determined a little bit by what type of loan you do, whether it's conventional or FHA or VA. The other thing that can come into play is if you're currently salaried and then you move to a commission job, something like that, then there's going to be further restrictions there too.
So the moral of the story, Mike, is what I'm hearing and what my experience is that the best thing to do is to talk with your realtor who has the professional lender, their primary lender, who they can consult with to determine whether someone has the ability to buy. Don't just assume that you can't buy. What's all that could be said is no, and or let's wait 30 days or 60 days, whatever.
Yeah, patience is what was the big takeaway that I got from this.
Exactly.
Exactly. Make sure and how important the relationships are that between Bernadette, you and Chad, and to be able to bounce things off each other. So, I mean, for anybody out there, I think the biggest takeaway is if you had to decide between an online product or somebody that's going to give you the personal service, it's really a no-brainer. Talk to Chad, talk to Bernadette, and you're going to get that personal service that you want and deserve. Before we let you go,
real
Chad,
estate. One more quick thing. Real estate is almost never works between 9 and 5, Monday through Friday, when lenders work. So with Bernadette, if you have a local lender like me, you will be able, if Bernadette calls me at 10 p.m. on a Sunday night, she's going to reach me and I'm going to answer. And that's what it takes in this market to get offers accepted, is being able to be available at all times, because when you're writing up an offer, it's normally on a Saturday or Sunday. And if your lender isn't available,
he's freezing again.
You're probably going to lose that. Oh, sorry.
Yeah, you froze up a little bit, but I think we knew where you were going with that. It kind of reminds me of something you like to say, Bernadette. You don't work 9 to 5. Our team works from start to finish. So I've always remembered that about, I mean, and it's so true. It really is. Before we let you go, Chad, can you give us your contact information so everybody can reach you? I know obviously they can reach you through Bernadette, but your direct line and all that good stuff.
Yeah, my website is a great place to start, and that's just my name. It's www.chadthomas.com, which is CHADTHOMAS.com. And my cell phone that you can reach me at all the time, I answer it 24/7, is 509-216-5555.
Any social media platforms that you rely on, or you
Extra as well?
No, I'm pretty old school. I am on Facebook, but yeah, it's there. I'm not real sure how to tell you to get there.
I know how that goes. And Bernadette, go ahead and give your contact information. People want to get a hold of you.
Again, it's 509-868-9181, www.spokanepillar.com.
Get a hold of me, also 509-850-4748. and I work for the Bernadette Pillar Real Estate Group. So it's great to be aboard. So we had some fun, guys. I thought this was great. I think
I
this
did
guy Chad knows what he's talking about, Bernadette. What do you think?
He does.
Thanks.
He does. I promise you.
Well, Chad, it was great to have you aboard, Chad. It was a lot of fun, and we're definitely going to have you back. And Bernadette, it's
Awesome.
always great to be with you on the Bernadette Pillar Real Estate broadcast. And the podcast, and it's
Ditto.
growing. We're having a good time. So we'll be back again next Friday. We appreciate you watching. I'm Mike Gonzalez. We're so glad that you're watching. We'll see you again soon.
Aloha, everybody.
Thanks, guys.
Bye-bye.